What if I told you that the city of New York will give you up to $100,000 to buy your first home? Not a loan from the bank, not a family gift. The city will literally hand you up to $100,000 towards your down payment and closing costs. Most people I talk to have never heard of this program, and it's not the only one. There's at least 4 major programs available to first-time buyers in New York City right now, and today I'm going to break down every single one of them, who qualifies, and how to actually apply. I'm Joseph Ranola with the Bridge and Boro Team at Real Broker. We specialize in Staten Island and Brooklyn real estate. I work with first-time buyers every single week, and here's what I see over and over again. Someone comes to me and says, Joe, I want to buy, but I don't have $100,000 or $50,000 or $200,000, whatever, for a down payment. And I say, you don't need $100,000. You might not even need 25. And let me show you why. Because here's the thing. The biggest barrier to home ownership isn't the monthly payment. Plenty of my clients are paying $2,500 or $3,000 a month in rent right now, sometimes even more. They can afford a mortgage. The barrier is the upfront cash, the down payment, the closing costs. And that's exactly what these problems solve. Now, before we get into each program, I created a free first-time buyer programs guide that has every program I'm about to cover, the income limits, the application links, and a calculator that shows you exactly how much you need out of pocket at different price points. It's completely free. The link is in the description and in the pinned comment. Grab it now. Now let's start with the big one, HomeFirst. So HomeFirst is administered by the New York City Department of Housing Preservation and Development, HPD for short. It provides up to $100,000 towards the down payment or closing costs on a 1 to 4 family home, a condo, or a co-op in any of the 5 boroughs. So here's how it works. It's structured as a forgivable second mortgage. That means if you stay in the home and don't sell or refinance, the loan is eventually forgiven. If the assistance is $40,000 or less, it's forgiven after 10 years. If it's more than $40,000, the forgiveness period is 15 years. But, and this is important, if you sell or refinance before that forgiveness period is up, you do have to pay it back in full. So please keep that in mind if this is a way that you'd like to proceed with purchasing a home. So who qualifies? You need to be a first-time home buyer. Your household income needs to be at or below 80% of the area median income, and you have to complete a home buyer education course through an HPD-approved counseling agency. So let me put this into real numbers. On Staten Island, the median co-op price is $245,000, with HomeFirst covering your down payment and an FHA loan at 3.5% down. Your required down payment is about $8,575. HomeFirst is going to cover that and then some. You could walk into that home with really very little out of pocket. Now, even on a $575,000 attached home, let's just say, or a semi on Staten Island, your FHA down payment, about $20,000. HomeFirst covers that entirely and can put another $80,000 towards your closing costs. This is the single most powerful program available to New York City first-time buyers, and most people don't even know it exists. Now, next up, the Homebuyer Dream Program, or it's a little confusing. This one comes from the Federal Home Loan Bank of New York. HDP provides grant funds up to $30,000 that can be used toward your down payment, closing costs, and even home buyer counseling services. And here's the key word, it's a grant, not a loan, so you don't pay it back. So to qualify, you need to be a first-time home buyer and your household income needs to be at or below 80% of the area median income. You apply through a participating lender, not directly through the Federal Home Loan Bank. In February of 2026, they allocated over $31.6 million to fund this year's rounds with 110 member banks participating. So the money is there. You have to take advantage of this stuff if you qualify. But here's the thing. This can be stacked with other programs. So you could potentially combine HDP with HomeFirst. That's up to $130,000 in assistance on a single purchase. The catch? The funds go fast. When a round opens, participating lenders submit applications and it's first come, first served. So you need to have your lender lined up and your paperwork ready before the round opens. Now, let's talk about the third program, SONYMA, the State of New York Mortgage Agency. They just call it SONYMA. So SONYMA is a little different from the first two. Instead of giving you cash for a down payment, SONYMA gives you a better mortgage. They offer below market interest rates, typically 1/4 to 0.5% lower than what you get on the open market. That might not sound like a lot, but let me show you what it means on a $680,000 home, which is the median sold price on Staten Island right now. At a conventional rate of, say, 6.5% on a 30-year fixed rate with 10% down, your monthly principal and interest payment is about $3,869. At a SONYMA rate of 6%, let's say you got that half cut off, that drops to about $3,670. It's almost $200 a month in savings. Over 30 years, that's over $70,000. But more importantly than that, in my opinion, is just the affordability. Think of what that $200 a month could get you instead. That covers your phone bill, or that covers, maybe half of your car payment or whatever. When you own a home, it's all about lowering all of your expenses as much as you can. Your just general monthly affordability is easier. SONYMA also has a down payment assistance loan that provides up to $15,000 as a no interest, no monthly payment second mortgage. It's repaid when you sell, refinance, or pay off that first mortgage. And here's what's great. SONYMA has programs for people who haven't owned a home in 3 years. So even if you owned before but lost the home or sold it, you might still qualify as a first-time buyer under their definition, as long as more than 3 years go by. Income limits are higher than HomeFirst and HTP, so more people qualify, and SONYMA works on 1 to 4 family homes, condos, and co-ops across the state. Okay, now this one isn't technically an assistance program, but it's the foundation that makes all of the others work, FHA loans. So FHA loans are backed by the Federal Housing Administration, right? They allow you to put down as little as 3.5% with a credit score of only 580 or higher. And they're more flexible on debt to income ratios than conventional loans. So let me break down the math on Staten Island's median price of $680,000. With an FHA at 3.5% down, your down payment is $23,800. Your estimated monthly payment, including principal, interest, taxes, insurance, and PMI, it's about $5,100. Now, compare that to a conventional loan at 20% down. You'd need about $136,000 up front, but your monthly payment drops to about $4,100 because you eliminate PMI. It's about a $900, $1,000 a month difference. But the question becomes, do you have $136,000 sitting in a savings account? Most first-time buyers don't, and that's why FHA exists, and that's why it pairs so perfectly with HomeFirst and HTP when they line up. With FHA plus HomeFirst, you could buy, let's just say, a $575,000 home on Staten Island's East Shore with essentially $0 of your own money for the down payment. HomeFirst covers the $20,000 FHA down payment and still has $80,000 left for those closing costs. And don't forget VA loans if you're a veteran. 0 down payment, 0 PMI. I've helped veterans buy in both boroughs with literally nothing out of pocket for the down payment. We just closed on one a month or two ago. My buyer brought like $1,000 to the closing table. I mean, I had a closing a week before that. The buyers bought like $140,000 to the closing table. So think of that. I mean, if you have $1,000 in your pocket, we can get you into a house. It's crazy. But all right, so you know these programs exist. Now, how do you actually get the money, right? So here's the step-by-step. Step 1, we got to take a home buyer education course. This is required for HomeFirst and recommended for all the others. HPD has a list of approved counseling agencies. The course is usually about 8 hours long and can be done online or in person. Some are free and some charge a small fee. Step 2 is get pre-approved with a lender who participates in these programs. Not every bank or mortgage broker does. You need someone who specifically works with HomeFirst, HTP, and SONYMA. This is critical. If your lender does not participate, you cannot access the funds. Step 3, find your home. You have to start your search knowing your budget, your loan type, and which programs that you qualify for. This is where working with an agent who understands these programs matters. I can tell you from experience, some listing agents don't even know what HomeFirst is, and that creates friction in negotiations if your agent can't even explain. Step 4, apply for the assistance before you go to contract. Your lender handles the HomeFirst and HDP applications as part of your mortgage application. SONYMA is built into the loan itself. The key is having everything lined up before you find the home, not scrambling after. Step 5, amazing, close. The assistance funds are dispersed at closing. They show up at your closing disclosure just like any other credit. Your attorney reviews everything, and essentially instead of you coming to the closing table with a $100,000 check, you just have these credits from these programs. Now, the 3 biggest mistakes I see. Before I wrap up, let me save you from these 3 mistakes that I see first-time buyers make with these programs. Mistake number 1, waiting too long to start the education course. The HPD-approved course takes time to schedule and complete. If you find a home tomorrow, you haven't done the course, you can't use HomeFirst. Start the course now, even if you're not ready to buy for 6 months. Get it out of the way, get it done. That's it. You don't got to think about it. It's done. Mistake number 2, using a lender who does not participate. I've had buyers come to me pre-approved with a big bank that doesn't work with any of these programs. Now they have to start all over with a new lender, which delays everything. So ask your lender up front, do you participate in HomeFirst, HDP, and SONYMA? Mistake number 3 is not understanding the forgiveness timeline. HomeFirst is forgivable, but only if you stay in the home. If you buy and sell in 5 years, you owe that full amount back. It's not a deal breaker, but you need to plan for it. This isn't a flip, this isn't like flip money. This is for people who are gonna live in their home, right? And that's the reason that they put that rule in there. They don't want people using the city's funds to just buy houses and flip them and then do it again. This is for somebody who is an end user. You're gonna buy this home, the city's gonna give you money for it, and you're gonna buy it, you're gonna live in it, you're gonna enjoy it, you're gonna love it, and you're gonna benefit from it. So look, buying your first home in New York City is not impossible. The numbers prove it. Entry points on Staten Island start at about $245,000 for co-ops. Attached homes, you could be looking at $400,000, $500,000, $600,000. And between HomeFirst, HDP, SONYMA, and FHA, you could walk into a new home with very little out of your own pocket. If you want to know exactly what you qualify for, I offer free buyer consultations. We'll sit down, we'll look at your income, your credit, and we'll figure out which programs work for your situation. No pressure, no obligation. The link to book is in the description, and grab that free first-time buyer programs guide while you're down there. I'm Joseph with the Bridge and Boro Team. I'll see you in the next one.